What's up? Welcome to my channel. I'm Francisco Pantoja, and today I'm going to be talking to you about the stock market, specifically the trading basics. Before we get started, a little bit about me. I started trading and investing roughly about 6 years ago, shortly after I joined the Marine Corps. COVID happened, and I was in a holding platoon during my MOS school, so I started trading and investing. Initially, I lost probably about $10,000, which to me at the time was a lot of money, and this all came because I started trading instead of starting with investing. I didn't know the basics. I didn't know anything. I just started gambling. I took $10,000 in margin, which is, if you don't know what margin is, I started borrowing money with the hope of making more money, but I didn't make more money. I lost it all, and then I had to bounce back, and that's kind of what made me start trading and investing. So in this class, you're going to be learning the trading basics, and by the end of this class, you're going to know what the market is and the difference between trading and investing. Without further ado, let's go ahead and get started. So the first thing we have to know about trading and investing is what a market is. A market is simply an exchange of goods and services. It's where buyers and sellers come together and they have an exchange. Quick example, when you go to the grocery store, you are in that case the buyer and the grocery store is the seller. That is a very easy example of what a market is. Markets go all the way back since the start of time. There's always been an exchange of goods and services. To really understand what a market is, we have to know why they exist. The reason they exist is mainly three things. Number one, to raise capital. Companies go public in order to raise capital. That way they can use your money and they can expand on their services or whatever it is that they provide. That way they can have their company grow. Second reason would be speculation. They put their companies on the market. That way institutions can buy into the company, and so that everyday traders or investors can make money from the future price of their company. And then third would be price discovery. When you put something on the market itself reveals the true value of whatever it is that's in the market. For example, when you go to the grocery store, if everyone's buying milk, the price of milk is going to be higher. If nobody's buying milk, then the price of the milk is going to be lower. This is also known as supply and demand. And then the market is also used for building wealth, which is what most people nowadays know about the market. So how do we start building wealth? That's going to be through trading and investing. So what is trading and investing? Trading and investing is simply buying and selling on different time frames. Let's go ahead and start with investing first. Investing is usually a long-term approach to building wealth. It requires buying and holding for years, maybe decades. It's usually a little bit more passive, and you're looking to benefit from the appreciation or making it an income source from dividends. Dividends are usually a piece of the profits that the company gives back to investors as a reward for letting the company use their money. Investing relies on fundamental analysis, which usually requires you to look at the financial statements, which is going to be your balance sheet, your income statements, and your cash flow statement. And the goal for investing is steady growth over a long period of time. It's not quick profits. Quick profits is more so for trading. Trading is on the short term. You're looking for maybe 5 minutes here and there. You're looking for maybe a couple hours. You hold trades the most a couple days to a couple weeks. You're buying and selling more frequently. You're monitoring positions very closely, looking for the price movements. You're usually looking for technical analysis to be the indicators that helps you make the decisions. So it requires screen time, it requires discipline and clear rules. Trading is a little bit more riskier than investing, but you can manage it properly if you know and you have proper risk management rules. And I highly encourage everyone to do both, trade and invest. Investing should be your foundation, and trading is the engine that gets you to your goal a little bit faster. The key differences are going to be time horizon, strategy, analysis, and risk. The time horizon is going to be depending on the time frame that you're trading. You can be trading anywhere from the 1 minute chart to the daily or weekly charts. Weekly charts are usually more so on the investing side, but investing can be weekly, monthly, yearly charts, and you're looking to hold for a very long time. Strategy, traders is buying and selling very frequently, and for investors is buying and holding for an extended period of time. The analysis for traders is technical charts, patterns, trends. For investors is usually fundamental analysis. How is the company doing as a whole? Is this a good business to put my money in for a long period of time? And risk for trading, it's a little higher because it requires a little bit more timing. For investing, you can buy at any time and sell whenever the price is higher than it was before. That can take a couple days, a couple months, a couple years. That's the goal behind investing. Think of investors as farmers planting seeds and waiting, and think as traders as merchants seeking to benefit from quick profits. So now that we know the key differences between trading and investing, we have to ask ourselves, why do we trade? We simply trade to beat a benchmark. That benchmark is usually the S&P 500 when it comes to the stock market. And as you've probably heard before, the market moves 8 to 10% over a long period of time on average. Our job as traders is to beat that benchmark. Let's go ahead and take a look at the S&P 500 chart. Real quick disclaimer, I went on a monthly chart and I picked 2 different points so I can show you the difference between trading and investing. You don't normally trade on a monthly chart, that is more so on investing. However, let's take a look at the difference between trading and investing. This blue line that is going up and down, that is the indication of price of the S&P 500. This black line that's going across the screen, that is telling us the return that we would have gotten if we started investing in January 1st of 96 and we sold on October 1st of 2019. The total return would be roughly 325%. For trading, we would take smaller, more frequent trades. We would buy at the same time. We would sell at the top of this trend reversal. It's very hard to time the tops and bottoms, but for illustration, I'm using the highs and lows of this chart. So, like I said, we'll get in on January 1st of 96. We get out right here at this high for 99%. We get into a short and we get out for 45.5%. In this case, you can short the market, and instead of losing 45%, you would make 45%. Then at the bottom, we would then again get into a long. We would trade the market up for an 85% return. Then we would trade the market down for 47% and trade this long trend for 299.74%. The biggest difference here is that, as you can see, investing gives you 325% and trading gives you 577%. If you started investing with $1,000 over that same period of time, it would end up as $4,250. And if you started trading with $1,000, you would end up with $6,770. That's a difference of 252% or $2,520. You can see how different that is. If you did both, the returns could be even higher. Now, for key takeaways, I want you to take out of this lesson is that the market exists to connect buyers and sellers, to discover price, allocate capital efficiently, and that trading and investing are different paths to the same goal. And yes, you can do both. I highly encourage people to do both. You should start investing to learn the market, and then gradually shift over into trading and continue investing. And then some key important things is going to be to protect your capital. Like Warren Buffett said, the first rule is to not lose money. The second rule is to never forget rule number 1. Once you create a system, follow your rules, build confidence through repetition, and master the fundamentals before chasing advanced strategies. Thank you for watching. Don't forget to subscribe. If you have any questions, put them in the comments. Please like this video. And if you found it useful, send it to one other person. It'll help us grow, and it'll encourage me to continue coming back and giving you guys more